All right, let's do this. Another fun video. Fun for me anyway. I want to talk about selling options. That's all I talk about really is selling options on these little videos. Look, even though I say selling options is for everybody, selling options on every stock isn't for everybody because every stock is not option sellable, meaning you're not going to get much premium in selling certain stocks. Like you would think, let's say, now this stock here is crazy. Let me look at this first. I always have to look at this stock. This is my Bitcoin without playing Bitcoin stock, MSTR. Look that company up if you want. But for me, it's just a way to play this stock without actually playing it. And look at these options, man. The stock is at 169.30 something. If you want to take a risk and sell a really nice premium, look at that. That's $615. You could make a bet saying I don't think it's going to go down to 167.50 by October 11th and put $620 in your pocket. You might get a sign, but if you look at this chart, man, it's not really crazy, and it's kind of bullish. I mean, look at it now. It's kind of just staying in this little zone here. But I mean, from 43 something in January of this year, it's really a scary stock to play. But it is a stock that you can make some really good money on. And it's also a stock that was at $1,600 about 2 months ago until they split it. Very scary stock. Anyway, let's talk about every stock is not what I want to say. All stock is not created equal when it comes to options. You need a lot of things for a stock to really have good premiums, and volatility is one of the main things. It's got to be a stock that's known and got a lot of stuff going on. So let's just run through a few. So MU, what's this? Micron Technology. What their option looks like? These are decent. I could see this. I could see this next week playing a 98 option, collecting $85. I could see that. That means you'll be looking for support and resistance at $98. I mean that's below its low, and look, it's kind of been going down. Yeah, I would take that. I would do that. So that's Micron. Uh, all of these are probably gonna be decent. Otherwise, I wouldn't have them here, except for this crazy rip off. I got rip off on this. I gotta do a video on how this stock burnt me. It's burnt me, and I'm doing a rescue mission, but later for that. But the options, options are crap. The put options, the call options, they all they're just crap. I'm sorry, they're just crap. This stock was a $90 stock 2 months ago, and it has, let's see, yeah, $99 in March, 90 some dollars in May, and it just went to hell in a handbasket, bro. Literally. I don't even know where the bottom is at on it. I have to talk about this stock. This is going to be the stock where I tell you to show you how you can get burnt. You still can survive it selling options, but this is how you get burnt. This is how you get burnt. If you buy the stock here and it does this, you burnt. You burnt because that is a what's that like a $98. That's a $60-something loss. You do that times 100, that's $6,000. Now, the only way you're gonna be able to survive something like that is you hold it, and prior to it taking this crazy drastic nosedive, here you were selling options. You were selling options, and you got $4, $5, or $6,000 that you've already sold. So this doesn't kill you. It hurts, but it don't kill you. Let's look at some other popular companies that's got some crazy options premiums. Tesla, very volatile. Look at this. This is insane right here. Tesla is insane, man. But let's see what these option prices look at. Look at that. You can make some money on Tesla. Only thing is though, let's say you was trying to avoid getting a sign. Damn, I hate doing all because it's gonna pull up everything. Let's say you want to do an option next week. You was trying to avoid getting a sign. You see this 235 here, strike for $430, and you was like, I can't do that because let's see. You would think you'd be safe, but look, it dropped to 237 just yesterday. What's the day? It was at 237 just yesterday, bro. Look at this drop here. You think you'd be safe. You're 260. You think like, well, I'm gonna buy a $242 put. I'm gonna sell a $242 put. I should be okay. Well, if this was Friday, you would not have been okay. You'd have been owning $24,000 worth of Tesla, which is some people that's not a problem. That's not a problem if you're in the Tesla, because you came back and made some money by selling a car. But I don't know, man. To me, that's too volatile. If you got a lot of money, let's say if your account is 50, 60, no, $100,000, and you can afford to lock up $24,000, $25,000 and just keep riding this wave, it's some good money in it. But you don't need your money tied up if you ain't got a lot of money and you selling options. Because $24,000, and if you ain't got but $40,000 you're playing with, that's over half of your money, half your bankroll limits you. But you can get $440 at a $235. You can come next week and probably sell the same $235. You can just keep doing that, man. It's money in it, but woo, Tesla's a little bit too risky. And I'm gonna tell you, I've played Tesla, and I didn't get burnt, but I did have one of these moments where I got it. I sold an option here, and it did this, but I didn't have to hold it long. I think I hold it. Actually, I had to hold it for 2 months because this was back early in the year. And so I didn't mind, right? It just held up all my capital. I mean, you got $20,000 that you can't use because you take a nosedive like this, you can't sell any options that's gonna be equivalent to your cost basis. You'd be taking a risk. You had to sell an option like a month out, and a month holding Tesla, you sell an option that's meeting your cost basis, and a month later Tesla be up here. So you don't missed out on this money and this money. Now Tesla's too volatile. Too volatile, Tesla. Let's see. Now this stuff right here, you can't play this at all unless you just really balling. Meta, because you're talking $50,000, $60,000 just to play an option. But if you had it and you wanted to buy an option for next week, uh, it almost isn't worth it. You need $57,000 to get $360. That's $570. Stock is at $585. Chance of you getting a sign, yeah, you might end up getting a sign. You might get by. You might get by. It's hard to say. I mean, because there's some potential supports that might save you next week. What we got? I really wouldn't count that. Let's see if I go out. What I say, 570. I mean, there's potential like support where it might not drop back to 570 by next week, and you just keep your little money. But man, $57,000 to gain 380, 385. That's I don't even think that's definitely not 1%. Let's see. I did that wrong. 385. Yeah, that's not even 1%. I gotta get at least 1%. Very risky. But if you're the kind of person you don't mind owning Meta, you'll do this week in and week out. You can do it there. You can go on the next week. You want to play that same 570. It won't be this amount because you got more days. But I mean, it's still gonna be $400 or $500 there because you're doing puts because you're hoping you don't get a sign. You're probably gonna do another $400, $500, $600 here. Do that every week. That's already $1,500. All right, and let's do some stuff that isn't so popular that you would think would have some decent premiums, but they are very disappointing. This is Delta Airlines. Delta Airlines is a pretty well-known company. I would probably do that. 47.50. No, probably wouldn't do that. Probably wouldn't do that. Probably wouldn't do that because, again, the things you want to make sure is you don't want to play stocks or sell options on stocks you don't want to own. If you don't want to own it, I mean, that's not absolute, but that is the start of selling options. That's the first thing you want to think about. I don't want to sell options on stocks I don't want to own. But with a stock like MSTR, I don't want to own it. But to play in Bitcoin a little bit, I'll sell options on it. I'll sell options on it way, way, way out the money because the way out the money options, because it's tied into Bitcoin, this stock seems to be like just stupid with the premiums. I mean, just stupid. The 155 is $221. Every week it's just higher and higher. It's crazy. So this is the one stock that I wouldn't want to own, but I would sell options on. Delta Airlines, I wouldn't want to own it. I mean, I wouldn't mind owning it. That's a lie. I wouldn't mind owning it, but I don't know if I want to take a chance of owning $4,700 worth. But this might not be a bad option though. I mean, it is Delta Airlines, and if I can get $100, that's $90. Let me see. They must have. They must have. Let's see if they got earnings report coming up, because that seems like a lot. Delta Airlines earnings is, yeah, October 10th. I wouldn't do this. I wouldn't do this. I knew that didn't look right. See, prior to earnings, you can have stocks doing a lot of movement, up or down. And I've known that Delta does not look this good when it comes to options. Let's see, like Love is Southwest Airline. And see, this more like what airlines options look like. So and then when they get close to their earnings, pretty much all the stocks gonna have some kind of movements, and that makes them risky when you look at them. If you look at them and you know that the options have kind of been in like this range, 25, 40, $50, and the further out you go, the less they are. And then you go look at Delta Airlines and you start seeing some decent options way out the money. You need to be going to look to see if there's some kind of event happening. And in Delta's case, the event's going to be October the 10th. They're going to announce their earnings before. So, these people are gambling. People are gambling to say, what is it going to do? So I wouldn't sell this option. I wouldn't sell this option. And if I was a swing trader, 11 October, I wouldn't even do that, because they're going to announce on the 10th. That only gives it one day to make a move. So if the move is not, close to parabolic, it's not going to be much money in there, because data is going to tear you up. You got one day before it expires. Nope, bad move. Wouldn't do it. See, American Airlines. American Airlines is just a stock I like, man. I don't know. I just always wanted to own this company, but you can see the options is just pure shit. I mean, there's no money in selling options in American Airlines. None. You basically would tie up 9,000. Is it 9,000? 9,500. Is that 9,500? I think you would times 100, so that's only like $950. But still, it's not worth tying up that money. That's money you could use to do something else with. Yeah, you're gonna tie up $1,000. You can tie up $1,000 just to make, I don't know, $5. So you can see all stock options are not created equal. J&J. Like, look, even some of these companies, like Johnson and Johnson, is fairly well-known company. Uh, I wouldn't tie up $15,000 just to make 56. I wouldn't do that. So you got to kind of pick stocks that's got some volatility, that has some name, and they have some real. Now, I'm only telling you the rookie, I'm not a stock analyst way. Is I go and look at stocks that are known, just your everyday product and companies, and then I look and see what their options are. But there are options, what they call them, you can get option analyzing tools that you can even do it on here. You can put filters in and set it up to where it picks options that got the highest movement, all kinds of different filters you can do. I don't do that because I ain't that kind of dude, man. And that's another crazy thing about this is you can do this and not being that professional, detailed, analytical person. You can pretty much uh, run options just in the tech sector. You know, your Nasdaqs. I mean, your Nvidias, your Teslas, uh, your TTDs, TSM, technology stocks. You can do that on technology stocks and get decent premiums. You know, look, 114, 140, and what else? That was like a 109. Let's see. If I wanted to play this, I would play like a 107 for, let's see, a 10, we'll do 107. I'll do a 109 or a 110 for next week. You probably get hit on this one because there ain't really much. There ain't really much support levels. 111. I don't know, maybe. But again, if you don't mind owning the stock, you know, that's probably a risk you would mind taking. Doing like a 110. It's got some support here at 110. You probably mind taking that risk. But I would let it drop, see if it's going to drop some more, and then, try to play something down here. But you can just do this on one industry. And usually, to be honest with you, all I do is tech. I think most of the money I've made has been in tech. I do believe that is a true statement. Because when I look at my history, I've only played stuff like NVIDIA, MSTR, TTD, uh, some financial, let's see, Amazon, Google, Apple. That's where most of my options have been. And that's pretty much for the last 3 or 4 years. So you can do this just really sticking with one industry and learning how that stock moves. Learning how those stocks move, how each stock move. Apple, let's see. I don't think Apple got. Yeah, Apple doesn't have great premiums either. I mean, $21,500 a game, 52. It just doesn't sound right. It just don't sound right. So, but I mean, other than the day, you got to kind of look at how much does Apple move. So, I don't know what's going on right here, but yeah, you can play Apple. You can play a little closer, right? You can play a little closer to in the money because generally, you know, let's look at some of the history here. I don't think Apple moves that. It's not that crazy. Yeah, you can see here is it just kind of stays within a little zone. Now something's going on here, but it's still kind of staying within a zone where you can actually make some money and probably avoid getting a sign. But I don't know what's going on right here. Do they got earnings coming up? Yeah, this right here is wild. Let's see, that is a see, I can't hardly see it. 9.75. That's more than $9. From 233 to 223. Not really. It's a big drop though. That's a big drop. But yeah, I wouldn't. I don't know. I don't think I would play this. I don't. But if you don't mind owning Apple, you can be like, shit, I'm gonna play it. Give me $191, and I'll take a chance that Apple One drops to $222 by next week. Is that realistic? I would probably do that. I would probably do that. The low is 223. 220. I would do that. Yeah. 225, 222.50. Cause I mean you gotta think, I don't mind owning Apple at 225 or 220. That's how you gotta kinda think about it. And then you go ahead and look at the chart and be like, well, the low is 223. It's already down. Well, what happens when you down? The only way is up. 90% of the time when you down, you're gonna end up going up. So I would probably do that if I had $22,200. Yeah, I would do that. I would take that chance and collect $225. I mean $189 now. If you say I really want to own Apple, you could go in the money. Just pick that 225. It's already in the money and collect $289. And then there's chances are that it might. Let's say if it went to 226, you would still just collect the 225 and not have to buy the stock. But I don't never do a play like that. I'm either gonna go at the money or out the money. And I usually try to go weekly. All right, so I think that kind of shows what I'm wanted to show here in this video. Where's my stuff at? That all stocks are not created equal. Peace.